Hello, property investing masters. My name is Lloyd Ross. I'm coming to you from the RPM offices here in Bundall, and we are going to talk to you today about, of course, property. And today's topic's a really fun one for us because it's a myth-busting one, a boom or bust, and we're going to be talking about, is the Gold Coast property market a boom and bust market? And we thoroughly love this one because we have 25 years experience in the Gold Coast market, and we've been through a multiple number of cycles here, and we've seen land grow and plateau and grow and plateau. And on occasion, bust, but it depends on the property. And I want to talk to you about that today. There's a lot of information in the forums about this, so this will hopefully debunk a lot of the myth around the fact that the Gold Coast is a boom and bust market. So let me explain to you first what happens when the other capital cities grow and the Australian economy is on fire, as in growing well. When GDP growth is 3.5% to 4%, like it is at the upward trajectory of the business cycle, and a lot of property values have gone up in the major capital cities like Melbourne and Sydney, and people make a lot more money, and there's a lot of spending happening, people start to do weird things. They're making so much money, they do weird things, okay? And one of the weird things they do is they holiday to the Gold Coast, okay? And they think it's a fantastic idea to have a holiday place here on the Gold Coast, okay? They get caught up in the whole emotion of being here with the beautiful 70 k's of beaches. I get it, like I understand, it's a beautiful place to live, and that's why we live here. But on occasion, not always great to invest in with emotion and without rationality, okay? And so what causes this boom bust is this. People in other capital cities, they fly here or internationally, they see this beautiful place and they want to own a place here. Of course, they want to own an apartment because a brand new apartment like the Hilton, it's sexy, it's got this beautiful pool, it's across the road from the beach, it's hustle and bustle. We could holiday here for 2 or 3 weeks of the year, and to do that we have to own a property. We couldn't just stay in a hotel like the Sheraton and save all these thousands of dollars. We need to buy a property, right? I'm being very facetious because the reality is this is what happens. But these are the conversations that had. So people can get caught up in this whole the beauty of it all and the poeticness rather than the reality of an investment, okay? What happens when they make these irrational investment decisions is they put a step wrong and they buy an off-the-plan apartment or high-rise property. The problem with that is that they're buying something that doesn't exist, and it carries with it a very long construction risk period. If you're buying a house off the plan, it's only about 16 to 20 weeks. When you're buying an off-the-plan unit, sometimes it can be 2 to 3 years and sometimes longer if there's delayed construction. So if the problem with that is that in over a 3 or 4 year period, a lot can happen in the market. And we saw this in 2007. When you buy off the plan, you carry the construction risk for 2 to 3 years, you put down your deposit, you go unconditional, and you're committed to proceed to settlement, okay? In that 2 to 3 year period, let's say you bought it here, if the market tapers off and falls even, you still have to proceed and settle this block. You have to find the money. So if you've bought the property for say $800,000, it's a 2-bedroom brand new apartment in Oracle or one of those beautiful apartments that were built. If you buy one of them for the price in a buoyant market and you put down $80,000 or $100,000 for the deposit, you're committed to that deposit, okay? Non-refundable deposit, unconditional. So then what happens is if the property market corrects while it's being built or at the completion and it falls down to $600,000, you've lost $200,000. And to actually accumulate that back in the property market in a unit development on a brand new premises like this, it takes a very long time. And so what people do is they actually decide it's cheaper for them to walk away from $80,000 or $100,000 than it is to settle it and lose $200,000. So this is what happens. People walk away from their investment, and of course the poor developer, some poor developers, but they're left with all this stock that no one settles on. And that's what causes developers to go broke. They can't get the settlement monies in, people walk away, they don't settle, and all of a sudden the developer can't finance the project properly, and the bank will call on the loan, and the development will go into receivership. And that's what happened in 2008. I'm sure that's happened in many, many cities, many, many times, not just the Gold Coast. It will happen in all cities, okay, at different times. But the Gold Coast in particular, it happens to a lot because people get swept up in the beauty of these amazing apartments and they buy the wrong type of investment, okay? Apartments like this that are really, high end, they usually cost a lot of money to service. Like the body corporate fees are typically pretty high because they're really beautiful apartments. They do need, a lot of care taken to maintain them. And the other thing is units don't typically grow because quite a lot of the time the developers they're very optimistic. I'm not trying to beat them up, but they're optimistic about what their units each are worth in a rising market, and they'll generally sell them to you off the plan at a fixed price here, but they're selling them to you in what they feel it's going to probably be worth at completion. And their forecasts are very optimistic a lot of the time. So you buy it for $800,000 because they think it's going to be worth $800,000 when it's done, but it might not be. It might be worth less. So you can really buy high on these types of apartments. The way to buy these is actually to buy them, let's say perhaps halfway through, and you can go and ask the developer to sell you one at cost. And there's some developers that do it. But this is really what causes the boom bust of the Gold Coast. People coming into these types of developments in droves, okay? And then there's a slight correction in the market, and it's the holiday homes, not the family home. So what's the first thing to go in a really tough market? We'll sell the holiday place. We don't need it in the first place. We were swept up, we were irrational, and we just bought one. So that's the first thing to get sold. So they'll walk away from it and sell, and of course, the properties drop in value. And this happened to probably all apartments in 2007, 2008 in our city because there was so many of them. Like if you go into a city, and this happened in Brisbane too, you could see it a mile away. It was even in the papers. You don't have to be a genius to work it out. There was like 50 tower cranes in Brisbane. This is like only a year or two ago. There were so many tower cranes. I drove into Brisbane, I'm like, oh, there's a real estate bus coming. You could see it a mile away. And sure enough, all the apartments in Brisbane were selling for $550, now worth $450. They lost $100,000. They were selling for $450, now worth $350. In Hamilton, there's still some worth $350 there. So you can see that it's not just the Gold Coast. It happens in all cities, and it will happen in Sydney. It'll happen in Melbourne. It does happen in other places. Okay, but the Gold Coast, for whatever reason, is interesting because people generally buy for the wrong reasons. Okay, and that's why there's this stigma attached to it. It's no different to any other market. Okay, it's very similar, but people love to buy holiday houses here when they wouldn't normally buy them in Sydney or Melbourne or other places. And so this is what really causes a lot of the massive buoyancy and booms and then the collapses. But it only is attributed to inner city surface paradise apartments or Broadbeach. These are the inner city suburbs, like next to the beach. This is really where the collapse happens. Like in those big apartment blocks, they're building one now called Jewel. I'm sure the same thing's going to happen there with that Jewel apartment. I mean, there's going to be some fallout from that because there's so much supply coming on in a small area that I think people are going to lose a little bit of money. I don't know anyone that's really made much money off the plan unit purchases ever. Like if you want any advice, that you would never buy off the plan ever for a unit block ever. So if you do, you're probably not going to. You may not lose money initially, but you're probably not going to make a lot either. Because there's some properties I know in many capital cities of the units that haven't grown at all. So the good news is that we've experienced these boom and bust periods in the local market here, and what we've found is that in areas where families live here who live here, not beautiful unit apartment blocks in Surface Paradise, but actual freestanding homes, they actually don't bust, right? They may correct by 10%, but they don't have a fallout factor, okay? So none of this type of stuff happens with these. Let's say it was bought for $400,000, okay, or $500,000, and there was a correction, then it might fall away by $20,000 to $30,000 and drop slightly. But that's a normal correction in any market. And so if you get caught up in this whole, well, the Gold Coast is a boom and bust place, just remember, yes, it is for these brand new property, these apartment investments, and you would never invest in one of them. I would never encourage anyone to invest in one of them. That's crazy. So as long as you avoid that and don't do that, and you look at houses, they're in shorter supply, when families are in them, they don't want to move, and typically the borrowings are much less on a house in the suburbs than it is with a unit in Service Paradise. And of course, everybody knows that the maintenance cost and the upkeep of a unit is way higher with body corporate fees, sometimes upwards of $200 a week, which is $10,000 a year. And in homes, it's nothing. It's not much at all. So it's more effective to buy a property that's a freestanding home on a block in the suburbs of the Gold Coast that'll hold its value through most cycles and then improve and probably grow even better in boom cycles, which it generally does, than it is to ever buy an off-the-plan unit in Service Paradise. That's you're asking for trouble. So before you make any judgments about the actual market here, you have to understand what causes it and what to avoid. Because as the old saying goes, if I knew where I was going to die, I'd never go there. So if you know where you're going to die, never go there. Just stick with this type of stuff. And that's really what we coach our clients on, and that's what we believe in, that's what we've seen work time and time again over the last 20 years, and progressively you'll build wealth a lot faster. So I hope that's busted some of the myths about the Gold Coast market. I really wanted to do this one because I see it pop up in the forum, so at least you know now the true story behind what the Gold Coast market is like and where to stick to.